Inflation rose back into the spotlight and the market felt it, with investors watching every economic data point for signs of future rate cuts. The consumer price index report sent out joy to Wall Street and real estate circles alike. Let's start with inflation. CPI of May 13. The consumer price index came in slightly hotter than expected for April. Headline CPI rose 0.4% month over month, and core CPI, which strips out volatile food and energy, also increased by 0.4%. This marks the third straight month of sticky inflation, raising serious doubts about when the Federal Reserve might finally feel comfortable cutting rates. Producing price and consumer behavior. PPI retail sales May 15. Just 2 days later, the producer price index also came in above expectations, rising 0.5%, further confirming inflationary pressures are present throughout the supply chain. But the real curveball came from retail sales, which were unexpectedly flat, 0% growth, suggesting consumer out pulling back. This combo of rising producer costs and slowing consumer demand is the kind of economic cross-current that complicates the Fed's job. For real estate investors, these signals continued volatility in rate expectations and uncertainty in consumer confidence. Global headlines and market mood. Outside of the data, markets reacted to escalating geopolitical tensions in the Middle East and lingering concerns about China's economic slowdown. While not directly tied to real estate, these events weighed on investors' confidence, add volatility to bond markets, and influence the Fed's cautious tone. Now let's talk about the rates movement. Here's the bottom line. The 30-year fixed mortgage rate began the week at 6.89% and inched up to 6.94% by Friday. That is a 5 basis point bump, which reflects the renewed uncertainty around inflation. For the DSCR loans, which typically range 1.2 higher from current rate, is around between 8 and 8.14%. Final thoughts and takeaway. Inflation is proving sticky. Consumers are hesitating, and the Fed's path forward just got foggier. For investors and homebuyers, this means rates are likely to stay elevated for longer, so strategizing around today's numbers, not tomorrow's hope, is key. In short, hot inflation and flat retail sales pushed rates up slightly and reignited debate on Fed policy tightening. And just like that, these are already all news. Thanks for watching. If you found this video helpful, give it a like and subscribe for more expert insights on real estate investing. If you are ready to take the next step or have questions, my contact info is in the description below. I'm here to help you succeed. See you in the next video. Bye.